Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's make update of our yesterday's analysis, because current price action is very intriguing. You can see on the daily time frame we have discussed this moment that market in fact very often forms the stop grabbers side by side. It looks like the market is finding the support on this MACD predictor line. So you can see our context for trading yesterday was this stop grabber pattern. And I said that it's very often when the market finds support on this line, it could form multiple stop grabbers side by side. Yesterday we have another one, some sort of the high wave, but you can see this pattern hasn't cancelled the previous one, because the low of this pattern stands higher than the low of our initial stop grabber. So that is stop grabber as well. I can't exclude that we could see another one here. This very often happens when the market forms the stop grabbers in the direction of the previous thrust. So the thrust is completed. During the retracement, market starts to form the multiple stop grabbers and then accelerates to the upside. Will it be extended acceleration or not? It's very difficult to say currently, but I suppose that the target of this potential move to the upside could stand around 133.50 area by the many reasons. The first reason here you can see by this pattern A, B, C bottom. Recall that the target of this pattern will be right at 133.50 area. That's the first moment. We have another one, ABCD pattern on the weekly time frame, and the 618 extension of this pattern will stand in the 133.50 as well. Another moment is the 4-hour time frame chart. As we will see, it's our butterfly that we have discussed yesterday, and 127 extension stands as well at this area. So there are multiple targets. Some sort of the resistance cluster stands around 133.50 area. That is based on different patterns, and there's high probability that market at least will respect this area with some sort of the retracement. When the ABCD pattern is completed, it's normal when the market shows at minimum 3 retracement, but that also could be the 618. That is also will be in a row with the classical and even theoretical development of the ABCD patterns, if it will still proceed to some extended targets such as 127 or 161A. Well, that is our nearest term expectation, and based on yesterday's price action, I see that market probably confirms that analysis, and that we could rely on it, that probably market at minimum will take out of these highs. Since we have the target right on 133.50 area, I can't exclude that the respect of this area could be in the way of the double repo sell pattern that could be formed on this chart on the daily time frame. Well, probably it will looking not absolutely pure double repo, since it's not very significant thrust up. Well, will be extended targets or significant tops. So, but I still think that this could happen if we will combine all the moments that we have discussed. So I mean different targets, appearing of the double repo, significant resistance. So all this stuff could work in the way of the respect of this resistance area with the retracement to the downside. So now let's take a look at the 4-hour time frame chart. Here our butterfly that we have discussed yesterday, as we said, that's very probable that could be formed right. It's 127 extension is 133.47 area. We could call it 133.50, I suppose. And take a look. That is also the stop grabber to the upside, and it suggests that we will take out at minimum of these highs. So if you have not entered yesterday around 132.05, 132.10 area, as we suggested right here, you could do it with sticking with this stop grabber pattern. You do not need to use the whole some significant swings. You could stick with this pattern and play stop, I suppose, below this low, because I hope that market will hold this stop grabber. Well, or if you're scared to place stop right below it, you could place it below this area, because the canceling of the stop grabber will not mean that market will cancel butterfly, because the invalidation point of the butterfly is, the low of the initial swing. It's 131.58 approximately. So theoretically it will be better to place stop below this level, because market, for instance, could show some a bit deeper retracement to the downside. That is typical for the butterflies, and could start move to the upside from the bit lower level. But that pattern gives just better opportunity to place stop, but you will take the more risk as well. Probably you could focus on the stop grabber pattern here purely if you're a scalp trader. If this is too much risk for you, then that pattern could be nice with the target right above these highs. In general, current picture looks also bullish as well, at least currently. So I suppose that we could count on the potential upward continuation. Here we have another pattern as well, A, B, C bottom. It has the extension slightly lower than the target of the butterfly. I suppose somewhere around 133.25, 133.30 area. It's right here. What do we have on the hourly time frame? On the hourly time frame, first of all, I would like to worry you that is not the these reactions. These levels have different focus on the chart. This reaction was built on that focus, from that low till that high, the 618 support area. That's, by the way, the area that we have discussed yesterday, but as you remember, we thought that it could be reached by this ABCD pattern to the downside. But it happened a bit different. You can see market has accelerated and later has shown significant plunge down right to the same area as we have discussed, 132.06. Here we have excellent example of the bullish engulfing pattern right from this support area and some pullback to the upside. But these levels are based on that focus number of that reaction point. So they are absolutely different. I usually do not mess different fib levels from different focus points, focus numbers on the same chart, but I just want to save the time of the research. So first of all, this area I have used to show you that this area is very typical for the butterflies, that is 618 support of this whole swing up. Now, if you would like to base your trade on the 4-hour time stop grabber pattern, and that is the swing of this stop grabber, that is an invalidation point of this stop grabber. Now you can see that this coincides with this upward trend line that we have on the hourly time frame. Market has found support 3 times here, okay, and if market will show the pullback, the retracement in the body of the stop grabber on the 4-hour time frame, you probably could watch for these support levels. Take a look that 618 supports 132.21 coincides with the trend line. That is the combination of the fib support and the trend line that we have discussed in our Forex military school. Well, sometimes it could be a very useful tool to use for entering in the market, because this is significant support. Well, but take note that the extension of this pattern, A, B, C bottom, 618 extension, stands again slightly higher than the swing low and around 132.06, somewhere in this area. So if market will start develops to the downside, there was a possibility of some sort of the failure breakout to the downside and returns right back. That could happen. Well, but anyway, if you would like to take the trade based on the 4-hour stop grabber, you anyway should place stop below it, somewhere below this low. Well, that's all observations that I could share with you at the current moment. I think that market confirms now its bullish intention of the upward continuation, mostly based on the daily time frame and mostly based on the patterns that were not completed properly on the previous week. I mean the daily ABCD pattern. This pattern, market hasn't quite reached the target with the 40 pips. The same with the weekly ABCD pattern, the 618 target at the same area, 133.50. If we surplus all these factors, then probably we could be relatively sure that market will continue move to the upside. At least I hope to see this. Intraday charts as well shows the possibility to see this bullish stop grabber, 618 retracement, butterfly still in place, in its progress. Well, I do not see any bearish development currently on any chart that could tell us that probably something is wrong. Currently, situation is developing according with the standard way how it usually develops. It's natural. Price action currently is natural for appearing of the stop grabbers from the other patterns. So some problems probably could appear if market will erase this butterfly and will not reach the target. It's around 133.50. That will be not quite normal and will close below this low. So that is in fact our major invalidation point. Because if butterfly will hold and will work, then all our stop grabbers and patterns on the daily time frame will be completed. If butterfly will fail, market continue move to the downside, that will put under question all further development, since it's really an important moment currently.